What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, May 28th. Alright guys, Tesla stock here on Friday. We finished the day up $5.50, locking in a pretty decent green day here, plus 3.17% in regular trading hours, down a little bit after hours. Listen guys, as always, volume in the after hours is very, very low. When that's the case, take that after hours movement with a grain of salt, whether you're positioned short or long, in your favor, going against you. Let's take a look at Tesla and try to get the best feel we possibly can for this name heading into this coming week, heading into Tuesday. Of course, Monday is off. So we're going to try to get some directional bias out of the volume profile. We'll look at the psychological trading levels that a lot of decisions are going to be made around, so we need to take a look at those and be aware of those. We'll look at implied volatility, particularly important if you're trading options, expected move for Tuesday, and the directional bias coming out of the chain for Tuesday. Let's get started here with that volume profile analysis here on the 5-minute chart. Listen guys, by the way, if you're new here, Tesla's a daily upload, so I greatly appreciate you subscribing to the channel. If that's something you'd like to see more of, goal's 10,000, and I appreciate you doing so. Let's take a look. So listen, a nice green day. So bulls, ideally what we're going to want to see when we take a look under the hood at the volume profile is some bullish bias to support the move that already occurred in price action. We all know what happened, but if we take a look, like we peel back a layer of the onion, we're going to want to see bullish bias, at least some, that supports that 3% upside move. Whereas bears, ideally you guys would want to see really no bias at all, because you can't really expect ultra bearish bias on a day like today, but you ideally wouldn't want to see bias that supports the bulls movement. You'd really want to see nothing supporting that whatsoever. So off the open, pretty contextual open. We see high volume on the open, and then volume fades. It actually held on a little bit longer than normal, but it's pretty evenly weighted as far as bullish and bearish is concerned. We then see a dump off. Okay, this level here is very contextual for Tesla for pretty much the rest of the day after the morning. But what we saw on probably the most aggressive, or at least one of, bullish moves of the day, right there, what we saw is volume pick up out of context. That's not very normal for that time of day. We saw 5 out of context, high volume green bars, and then as soon as the red bars hit, volume fades off into the very normal volume that we typically see on Tesla, and then into the close, a little bit odd, we see a dip, but there's really nothing there in terms of bias. This here, guys, that big red bar, that's a rebalancing bar, so I tend to ignore that. So bulls, listen, it's not overwhelming, but we have some very clear bullish bias here. I'd say that's about, on a scale of 0 to 100, I'd say we're looking at about 40-50% bullish bias there in terms of like strength, right? 100 being the highest. Now, let's move on to something arguably much more simple, but highly effective. Okay, that's going to be the psychological self-fulfilling prophecy levels. We'll start on the very common 30-minute chart with the most popular indicators we can possibly toss on the chart, which is going to be the white line, the 50 period, and the gray line, the 200 period. Now, I say that they're popular not because I care that they're popular, not because I give them some sort of credibility, because a lot of people do, but I say that because of that self-fulfilling prophecy mentality. I'm only interested in what has eyeballs, because when people believe something works and there's enough money watching it, it tends to at least cause some thought around those levels. So you guys remember on Thursday we broke downside pretty hard off of both of those. However, you're on Friday, a pretty great high volume reclaim of both in pretty much one move. We didn't quite get a retest, that's okay. We moved higher and then kind of faded very slowly into the close. This was a good 30-minute chart on Friday. Here's what I'm really looking at come Tuesday. Okay, any downside retest of the 200 period, that gray line. Bulls, I want to see that bounce away on higher volume. In doing so, that would likely drag the 50 period up and get that quicker moving average up underneath the move to have a closer potential support level underneath the stock. Because the 200 period is a little bit slower. I just want to get that 50 up because it's quicker and everyone's watching that as well, just as much as the 200 period. Bears. Ideally, it wouldn't hurt to see this thing break downside through both of those on high volume. That would take at least about a 1.5% move. Based on where they are now, they're likely to wiggle a little bit heading into pre-market come Tuesday. But if you can get down beneath both of those on big volume, just get it out of the way, and then come up and retest the 50 on low volume and reject, that puts you kind of right where you want to be in one move if you can pull that off, bears. Now let's take a look at the 4-hour chart. You can see here that we currently find ourselves approximately 1.2% away from that 50 period here on the 4-hour chart. Listen, really simple here, bulls. If we come in and retest that, it's ascending. It's beginning to ascend at a little bit more of an aggressive rate after we were seeing it come downside. It flattened out and is now moving up. Okay, bulls. If we can retest that and get a bounce and a pull away to help that ascending nature of that continue, great. In doing so, we've also claimed that as support, because you guys see that we ripped through on Friday, but we never really got a retest. So that would kind of pull off both of that. The retest, claiming as support, and also helping to pull it up higher to make that ascending nature of the level even more aggressive. That would be good if you're a bull. Bears, really simple. Hard downside break. If you can get a retest in the same day, great. If you can get a rejection in the same day, even better. Okay, but if you can break that downside and give up what we claimed on Friday, that's perfect for you guys come Tuesday. All right, we're always looking for as many things in our favor across as many time frames as possible. Now, the most important chart of all is going to be the daily. Here on the daily, we're about 4.5% from that 50-day moving average. So that's asking a lot out of one day. Okay, so let's look at the most, I would say, crucial near-term immediate story. And we know that on Tesla, every $10 increment is going to be a psychological level, at least somewhat. What do you guys notice in the last couple of weeks? 180, even more. 180 has been a very, very important level. I mean, arguably going back, if you want to go all the way back here, we're talking like 3 months, but even just more recently, going back about a month, 180 has really been a level to watch. And we've been struggling with it for over a week now. You bears, if you could immediately reject off 180 and start fading downside, that sets you guys up for a near-term test of the 50-day, which is really your ultimate goal, is to get back beneath there, right? Because that discourages a lot of bulls, at least in the short term. Bulls, if you guys can get above 180 and claim 180 as support, that's a good start. We tried to do that last week, inevitably faded. If we can set that up again, this time try to make a run toward 190 in the days to follow, that's a beautiful setup if you're a bull. Applied volatility, if we look here, it faded a little bit on Friday. Compared to the last week now, we are a little bit high. You could argue somewhat flat, because, you're really looking at that much of a difference. So it's pretty flat, perhaps a little higher than it was a week ago as we head into this coming week, but essentially flat. Compared to the last month, we're looking at, honestly, I would say approximately the mid, maybe slightly higher range, probably more like the mid range compared to the last month. Actually, yeah, I'd say we're kind of like right in the middle range compared to the last month. And compared to the last 3 months, I would put us in kind of like the lower range. Okay, we're not extraordinarily low, but we are in the lower range compared to the last 3 months. So a little sloppy here on Tesla as far as IV. It's not super clear. You have to dig a little bit deeper, but that's where we lie in relation to all those trade timeframes. The reason I bring up 3, a week, 1 month, 3 months, is because you always want to compare IV, first of all, to itself. You can't compare Tesla's IV to SPY, right, or NVIDIA. Only compare it to itself, and always compare it to the time frame that you intend to hold the trade. Okay? Not necessarily the expiration, but the time frame you intend to hold the trade. Because if you're buying when IV is very low, right, that sets you up to perhaps benefit from some IV pump if it bounces and heads back toward equilibrium. The same thing is true if you buy IV when IV is very high. You can get IV crushed if it starts to fade and head down back toward equilibrium compared to your intended trade time frame. Now, expected move for Tuesday. We're going to do our educated guesswork here. It's part of trading a lot of times. We have the next expiration is going to be Friday, May 31st. And the expected move by Friday's close compared to this last Friday's close is plus or minus $7.92 per share. Now, we know that we don't have earnings or anything between now and then. Obviously we had them just not that long ago. So there's no one day that's going to have an outsized expectation. So here's what we can do. We take $7 plus or minus $7.92 per share. Divide that by 4 trading days, Tuesday, Wednesday, Thursday, Friday. Add back 50% to make up for the fact that the initial calculation assumes 4 green days in a row or 4 red days in a row. That's a silly assumption. We have to add back a little bit of volatility buffer. 50% I'm finding in this market is working the best. I will adjust that if it comes to it, but that's been working the best for at least a few months now. That leaves us with approximately a 1 standard deviation expected volatility by Tuesday's close compared to Friday's close of plus or minus $2.97 per share. That's about, with a little bit of educated guesswork, what the market is pricing in for volatility come Tuesday. Now, you're probably thinking, okay, helpful to know. Helps with options positioning, especially because you want to have a volatility bias, whether it's less than the market or more than the market, to go along with your directional bias. That is very helpful. And if you're only trading options on directional bias, it's very, very difficult to have an advantage that way. You also want to have a volatility bias. It's a little different than just trading shares, right? Because the pricing is a bit more complex. But directional bias, let's take a look at the options volume. 1.94 million total contracts traded on Friday. 1.14 million were calls. About 801,000 were puts. So we are seeing a bit of a call side bias on the overall call put ratio from Friday. And if we break that down by time frame, we go the 0 to 20 delta range. We have 456,000 calls, 346,000 puts. So again, seeing a bit of a bullish bias out of the short-term speculators here from Friday as well. Listen, guys, if you appreciate the daily Tesla coverage, the best thing you can do for the channel is free. Takes half a second. Please leave a like on the video and then get out of here and enjoy the rest of your long weekend. I appreciate it, and I'll see you in the next one.